Investing is a long-term game, right? And as far as NVIDIA goes, okay, I actually have some NVIDIA competitors for you guys. And the first segment we're going to be going over, we're going to be talking about GPU competitors, all right, graphic processing units. All right, and the first NVIDIA GPU competitor is going to be AMD. All right, that ticker is literally AMD. AMD stands for Advanced Micro Devices. All right, now post-market, that stock is currently trading at $162.21. So that's definitely a phenomenal buy for you guys. And if you guys aren't ready to invest into AMD, just add it to your watch list. Pay attention to the stock price. Whenever you see the price is, a good entry point for you to get in, feel free to invest. All right, we have another competitor, which is going to be Intel. All right, ticker INTL. Post-market stock value is at $30.97. Next up, we have Qualcomm. I'm sure Jason is very familiar with these tech companies. That ticker is going to be QCOM, currently trading at $199.18. All right, next up we have our artificial intelligence machine learning competitors. Okay, first up is Google. Obviously, we all use Google. That ticker is going to be GOOGL. All right, Google is currently post-market trading at $182.12. The next competitor, we have IBM. Ticker IBM. Post-market value at $172.95. Next is Microsoft. Ticker MSFT. Post-market valued at $446.95. And if you guys aren't aware, Microsoft, I want to say is the third most valuable company, because NVIDIA actually overtook Microsoft a few weeks ago. At some point, NVIDIA was ranked at like the sixth most valuable company.
Number one.
And now they're number one. All right, so we also have competitors in the data center segment, right? And obviously we know data centers, Jason, I'm sure you know this, they need to be updated as well as upgraded and well maintained. And the two main competitors in the data center space would be Google and Amazon. All right, Google will be responsible for custom TPUs, and Amazon will be responsible for web servers. All right, and also we have to pay attention to the automotive space, right? Once again, we have Qualcomm, which is a huge competitor in that space. They're responsible for driving software. We have Intel, and then we got Tesla. Big shout outs to Tesla, man. You know what I'm saying? The year 2024, Tesla done got your boy Iron Crypto Mac a huge profitable bag, man. So definitely shout outs to my man Elon Musk, even though he's a nut job, but shout outs to him. You know what I'm saying? And their ticker is TSLA, post-market price of $197.88. And keep in mind, guys, if you guys aren't aware of this, Tesla also did a 10-to-1 stock split. This was about 2 years ago. I want to say around October 2022, and that stock, Amazon or Tesla, I want to say they were trading well over $3,000 at one point back in 2018. So you're telling me I can buy a single share of a Tesla for less than $200?
That's incredible.
Come on,
it
man.
Almost makes you feel like it's undervalued.
It's undervalued. Mm-hmm. So, dude, man,
how much of it has to do with kind of the public, reception to some of the things Elon has done,
Yeah, I would have to say, man, he's quite erratic with his behavior as a CEO. Now, obviously, he still owns the company, just like he owns SpaceX, just like he owns Starlink. But I would think it would be intuitive as us shareholders, just step down as a CEO, hire somebody to fill that job.
He's not going to do that, though.
I don't think he's going to do it, but it would behoove him, to do that to save his companies, because if shareholders are upset, that means we pull out our millions and millions of dollars, and if we pull out our money into the company can potentially file for Chapter 21 bankruptcy.
I like your strategy with the portfolio, specifically Tesla. Mm-hmm. And you've mastered how to get the most out of it. Yeah. But for those at home, including myself, who's skeptical about the whole company entirely, including the CEO and his many different companies that people seem to have an issue with.
Yes.
It would seem as though a a lot of his stock is on a downward spiral because of the public backlash and people really just kind of dumping his product.
Sure.
You know what I'm saying?
Well, put it like
so
this.
How long will that continue is the question.
Well, honestly, I don't have an answer for how long that will continue, but I will say this, though. Tesla, they just signed a multi-billion-dollar contract with NVIDIA to produce some semiconductor chips for the automotive industry. And check this out, right? Sure, the Tesla stock year to date is down by about 30%, but check this out. If you guys were to go to the automotive stock market section and see who's the number one leader in in car manufacturers, it's going to be Tesla. They are literally leading the auto manufacturing.
So they're making the most cars.
They're making the most cars and they're selling the most cars.
Wow.
You know what I'm saying? And to be fair, right? Toyota is right below them. They're ranked number 2nd in the automotive industry. Okay, I believe Honda is probably ranked, in the top 10.
You can look that up.
Oh, I can look that up.
Yeah.
I think it makes logistical sense because growing up, what kind of cars did you see that were most common? Toyota.
But see,
right?
you gotta understand too that like other people are like, wait a minute, you're pumping all these products into the market, but you're not really selling them for the value that MSRP suggests. So how long can you sustain that? And a lot of people really were all about Tesla 2-3 years ago until maybe he started going off the rails. So where you had the trickle down effect where the top 10% could afford it, and they were going out buying them in droves. Now they're not. They're switching out to different options now. So
and I think
how long can that growth sustain? Is my question.
Isn't Tesla starting to become more affordable?
They are becoming a lot more affordable. You can actually purchase a Model Y online right now for about $30,000, and you also get the $7,000 tax incentive for purchasing
they're making off these cars is my question.
They're actually making the most profit out of any other EV company in the world right now.
That's amazing.
Yes, and check this out, right? So I have the list for you guys. So this is the auto manufacturers stock list, ranked number 1 to the bottom, of course, and you do have Tesla ranked number 1. All right, now like I had mentioned to you guys, Toyota is right below them. Toyota, their total market cap is $276 billion. Next up, we have Ferrari. Me personally, I don't own any Ferrari stock, and I don't plan on it. It's overvalued. I don't really see any growth with Ferrari. And after that would be Stellantis. I'm pretty sure Jason is familiar with Stellantis. As most of you guys, I'm sure you guys know about the Challengers and the Chargers, the Hellcats, Scat.
Stellantis is a Chinese company. Did you know that?
Yes.
Yes, which is kind of a conflict of interest, but.
And Stellantis is worth about $58 billion. Right below Stellantis, you have GM. You know what I'm saying? Got to throw General Motors in there.
Stellantis is a smart company. They purchase not just Chrysler products, but also Fiat, and they have their hands also tied into, I believe, Lotus as well.
Okay.
Yeah.
You don't really see those too often, man.
You don't. But these companies were in trouble because they couldn't make the transition from gasoline-powered cars to EV.
Gotcha.
They don't have any kind of, strategy to get there. So they needed, large sums of money to, help them to reinvest into their portfolio to get the cars that will sell to Americans.
So what's your take on those type of companies? Are they long-term holds, you believe, or are they something that we should try to profit off of for the now?
I don't think that any car company really is a long-term hold because they're all losing money right now. Nothing's selling right now.
So in other words,
so I guess if you invest now at this point, you're like, wow, it's a fire sale. Well, it's going to continue to be a fire sale, and we don't know how long. So I guess that's my, kind of hesitation is looking at the market kind of continue to go down, and you say to yourself, well, when do I jump in?
Right.
And that's where, I'm kind of directing my question to you. How can one kind of get over, the anxiety of investing, knowing that the market is really not trending in the right direction?
Absolutely. And I think one of the main ways somebody can get over anxiety when it comes to the market is just staying 10 toes down, having that discipline, having a strategy, right? Because what works for me may not work for you.
Give us an example of a strategy like I mentioned earlier.
Sure. So
somebody had $200 extra per week. So how would you invest $200 into the stock portfolio that you just outlined for us today?
Okay, so for my new investors out there, let's even go lower. Let's just say you only have $100 to invest, right? Okay. So if you click that link below in the description box, sign up with Webull, okay, you're going to get your 15 free fractional shares, okay? Those stocks can be anything from Amazon, Google, Microsoft, Nvidia. It's random, so you can literally get any stock, any fractional share for free essentially. And with $200, what I would say, start off by buying fractional shares of companies. Certain brokerages won't allow you to buy fractional shares. And for those who are wondering what is a fractional share, that just means that you're not buying the whole share, you're just buying a small percentage of it. So let's just say Tesla, right? Tesla, the post-market price is $197. Well, Iron Crypto Mac, or Paul, Jason, I only have $200 to invest, and I need $100 to go to groceries. So how can I invest? Well, I'm glad you asked that, because once again, with Webull, it will allow you to buy a fractional amount of a particular share. So let's just say you have $100 to invest. You want to do $25 in Tesla, $25 in Apple, $25 in AMD, because that's definitely one of NVIDIA's top competitors. And let's say $25 in, let's go with the retail company, Nike. All right. As of yesterday, right, Nike, their stock actually plummeted by about 17% because their main consumers, which are the ages between 18 to about 35, folks can't afford shoes right now. They have to make a conscious decision on whether they're going to pay their rent on time, whether they're going to pay their student loans, because obviously they resumed student loan payments back this year. And folks just don't have the necessary liquid cash to be buying shoes right now. So Nike is suffering. However, once again, as an opportunist, you look at these things, right? You look at these news events like, okay, this is a great chance for me to jump into the market. So me personally, yesterday, yes, I picked up a few Nike shares. Would you guys like to know how much I picked up Nike shares for?
How much?
$75.
It's not too bad.
At the beginning of this year, Nike was trading well over $120. You're telling me that I can get some of my favorite stocks at a discounted price?
Yeah.
What sense would it make for me to go buy a brand new pair of shoes in this economy right now when I know that pair of shoes will be significantly, it won't be valued at anything,
And
right?
I think, to kind of piggyback off of that, Jason was kind of thinking for the average person when it comes to, I don't have a lot of money.
Yes.
And the expendable money I have is extra income.
Yeah.
So I probably already saved up enough to feel comfortable. I'm paying my bills on time. So I want to play around with some money. So I know it's a risk. He also mentioned too that the market is not doing too well.
Absolutely.
So how does one feel comfortable enough to dive into the market, knowing that, hey, I might be at a loss. I might be, and I don't have experience with investing. So this is where the fear comes in, right?
Yes.
So, as a wise investor, you think when the market's down, I go in.
Yes.
Right? It's like going to the store and seeing a discount on some food, going to the store seeing a discount on clothing. You're more likely to buy when it's at a discount.
Absolutely.
It's almost being thrifty, as if you're shopping with coupons in the market.
Absolutely.
Granted, when you buy it and it's lower, that doesn't mean that it's done, and that doesn't mean that it's at its lowest. So yes, you might incur some losses because at a day's value, the stock might continue to drop $2, $3.
It can continue to go down for the next week, next couple months, even the next couple years. So that's the risk that just comes with investing.
To help the audience kind of really understand that, you mentioned, of course, investment is a long-term strategy. You have to be patient. So would you think, or would you suggest that 6 months to 8 months would be around the time you can expect to see your stocks mature?
Yes.
Okay, so with that being said, can you give an idea? You say if someone had extra income, maybe $25 to invest per week.
Yes, per week, okay.
Okay, what stocks in your portfolio 6 to 8 months ago can you show return on and give the audience an idea of what they can expect?
Sure, and that's going to be none other than NVIDIA, all right?
So 6 to 8 months ago, NVIDIA was trading at...
I'll share with you guys.
Sure.
Okay, so I want to say back in 2022, I initially...
Show us the numbers.
Well, I can show you guys after the podcast show. But
okay.
Yeah, so I'm gonna say back in 2022, I originally invested about $1,000 into NVIDIA when it was dirt cheap, and I've actually made a profit of about $6,000. Now, keep in mind, I actually have more NVIDIA shares now, especially after the 10-to-1 stock split. But I've definitely seen a phenomenal return with NVIDIA. Okay, my average cost per NVIDIA share, believe it or not, is $25.
Nice.
You know what I'm saying?
Incredible.
And yeah, man. So really, when it comes to investing in a down market, right, you just have to remove fear. All right, you have to remove the fear-monger mindset.
And it's also important to think, all right, you have different sectors that you can fit in. When you're younger, you're allowed to be a little bit more risky.
Yes.
There's something called risk tolerance, meaning this is your comfort level when it comes to taking losses. And also your time horizon, which means that you have this amount of time to be able to acquire this amount of money until you want this specific goal. So like, let's talk about retirement. My time horizon would be 40 years, right? Compared to the other person, it might be less, it might be more. So with that said, you can compound these purchases, say of NVIDIA, say of Google, with Amazon, Tesla, knowing that the market's liable to change.
Right.
Because these companies and their business aspects, their CEOs influence the marketplace.
Yes.
Their business doing, their products that they put out, all influence it. The social realm, how we talk about these businesses influence the price.
Show us another respect. That's what I'm saying. See, that's the thing about it, is that the audience needs to know exactly what to expect. So,
but if you're talking about the market, though, you can't.
Right. So we're talking about December of 2023. If I invested $100 into, let's say, Microsoft,
how much would it be worth?
How much would it be worth? What you're saying?
Okay.
Like what my money look like after 6 to 8 months of investment?
I'll show you guys. So this is one of my portfolios. Okay, so I initially invested $954
into
NVIDIA, and my profit
was that.
This was 2022.
22.
And I made a $4,016 profit.
What's a shorter turnaround time? Because that's what people want to know. A lot of people are under an understanding that it's got to be quick,
but it's not. It's not quick.
It's not
investing. This is a long-term game. It's a long-term strategy, because at the end of the day, we're not looking for a quick money scheme, right? We're looking for generational wealth. Generational wealth doesn't happen overnight. Generational wealth can take, years, and it's supposed to take years.
If someone was losing weight and they were trying to, kind of reach goals with like a weight loss challenge, right? They're going to keep checking the scale.
As they should. I check the scale about every other day.
Some people create anxiety by checking the scale. They call it, weight watching, anxiety, whatever you want to call it. There's a technical term for it. Find it, Google it, put it in the comments.
Sure.
But no, it's something to be said about being able to check progress on something.
Yes.
And to just blindly invest, I don't think a lot of people have that kind of mindset. And it bless you for having that mindset and being able to teach us all how to kind of like follow in your footsteps, which is phenomenal. So what is a perfect segue for a person who really does have more or less a typical mindset of maybe quick turnaround and helping them to kind of like break down into more or less a more regimented mindset? How do you do that?
I'll tell you what. You will have a portfolio of stocks that you'll choose. Every single day, you can check your unrealized gains, your unrealized losses. Unrealized means the stock has not settled. So these are all the numbers of all the money you've made or lost compounded together as a sum. Or you can check individual stocks. Today, this stock improved by this much dollars. So unrealized gain for today was $2.
Right.
Or unrealized loss meant by the end of the day, it lost $5. Every day you have that knowledge at your fingertips once you open a brokerage and you start acquiring stocks. So yes, you want to talk about being conscious and knowing where your money's going. That's where it's going.
Well, people haven't really seen these tools before work, and it sounds complicated to the layman.
Right.
Which is what I keep trying to lead on to, because maybe some examples. Maybe you're going to share some examples right now.
Sure, I can give you guys some examples. Yeah.
Where you can kind of like illustrate exactly, what we're speaking about here. Because we really do want to help you guys really kind of get into the stock investment game. It's important. So, it's for, not just right now, but for your generation.
Yeah. So let me give you guys the blueprint, right? Okay, so do you guys know the time the stock market is open? I'm sure you do, Paul.
Yeah, what is it, 5 a.m.?
Not necessarily. So, yeah, so West Coast time, the stock market opens at 6:30.
6:30, okay.
Closes at 1 p.m. All right, so me personally, what I do, it doesn't matter how busy my schedule is, whether it be work, going to the gym, family matters. At 6 o'clock every single morning, Monday through Friday, you best believe I'm looking at that market. I'm looking for opportunities. I'm looking for companies that I've lost profit in, and I'm also looking at companies that I gain profit in. And where I'm going to put my basket of money into, my reserves, I'm going to purchase stocks that are down in the red. And people might be like, why would you buy stocks that are in the red? Because I only invest into the cream of the crop. I already know that just because this company has a little bit of a hiccup, let's just say Apple, they have a data breach outbreak, right? And that causes, the stock to tumble by about 15%. Why wouldn't I buy it at a 15% discount? Because I already know by the end of the week, it's going to jump back up.
Yeah.
Apple is the number one company in the world, right next to NVIDIA, right? They're pretty much neck to neck with each other. So just because, there's a bad event that's out there that they're propaganda in the news outlets, that doesn't necessarily mean the company is gonna, file for bankruptcy, right? That doesn't mean you're gonna lose all your money. So once again, we have to remove that fear-monger mindset, right? We have to look at, a down market as an opportunity to invest.
So
right?
Great point. And I was alluding to the common mindset for the average person because I was there. I had no experience in stocks, and I'm still learning to this day.
Likewise.
So that's why I continue to break down these terms because vocabulary is very important because it dictates action 100%. And not. So we want to understand what we're talking about so we can apply it.
Yeah.
And so with stocks, I was talking about time horizon. How long do you have? Risk tolerance. How risky are you willing to be? How much money are you willing to make? How much money are you willing to lose?
Right.
And you can compound and do certain things that's going to allow you to avoid risk. As the average consumer, say you do have $200 and you open a Webull account, you put in your fractional shares, you choose, but you're still worried about losing money. All right, let's take it down a notch. It's your time now to do research on looking at the most consistent, most stable long-term stocks. You should also be invested in long-term stocks.
Right.
Let's say, for example, Bank of America. And not to plug BOA, but their stock has consistently been about $30 for forever.
You can bet on it.
You can bet on it, brother.
Yeah.
$30, it barely fluctuates. And we're going through financial crises right now, but Bank of America has still been like this. So one thing you can do is you can have these long-term stocks already as a bundle, and this is going to help combat the ups and downs of your other stocks.
Right.
So
anchor you down.
You can diversify your portfolio.
That's
you can have these tech companies. You can have these automotive companies.
Health companies.
You can have your software companies, etc. But you can have these other companies that have been known to be blue chip
companies.
You feel me? These are the companies that you can day in, day out. Gonna be great.
And once again, folks,
so just to kind of piggyback on what you just said there, and for the audience, can you give us some examples of some really good blue chip companies?
I just named them: NVIDIA, Google, Amazon, Microsoft.
Those are good ones. Those are good ones for sure.
But banking is kind of where I was trying to.
I hear you. I mean, you really got to look at what banks are doing well. Like Bank of America has forever been America's bank. And I can say that with me having accounts at Bank of America, and I could say that without having accounts. I just know it's very affordable and very consistent. That's one stock off the top of my head that I know.
Do they issue out quarterly dividends?
I don't know. Great question. I'm just gonna say I don't know.
I will say this much: even if it is a steady growth company, you're still going to be beating inflation by keeping your money in the savings account, because obviously, like we spoke on our last couple episodes, right? The dollar loses an annual amount of about 7% every year, and the average return you'll get in just about any stock in the stock market is about 10 to 12% gain year to year. So even if you do decide to invest into a safe company, low risk, low reward, right? It's going to be much better than just keeping your money in a savings account. Now, me personally, I'm at the point in my age where I can afford to have a little bit more risk. So yes, I am buying Tesla, right? Tesla has been it's just been spiraling down this entire year, right? I believe at the beginning of the year, Tesla was trading well over $260. Right now, it's currently at $197, and like a month ago, it dipped down all the way to $167. You guys want to know what I did?
You bought.
Oh, I loaded the boat.
Yeah, bro.
I loaded the boat.
Let me ask you this: do you think a lot of it has to do with some of the Cybertruck feedback?
Well, let me put it like this, right? I would have to say yes and no. The reason why I say yes, because obviously the Cybertruck is a hot commodity for its consumers. Think about it, right? All the celebrities, all the athletes are buying these Cybertrucks, are getting them wrapped, they're throwing Forgiato rims on them, and it's just making us normal consumers like, man, I want that Cybertruck.
There's another school of thought. There's another side of the coin that says we need this truck to actually do the thing that it was advertised to do, and 80%, it's 80% of what it was advertised. Well, so I think that the other side of it is, okay, we have the consumer product, and we also have the commercial product.
And the commercial.
And if the Cybertruck is advertised, I'm pretty sure they would have government contracts by now, which they don't.
Oh wow.
Yeah, think about that. Because you have a vehicle that supposedly has the ability to go to different planets. Mars, right? They joke about that, but when you think
it's not a joke, it's actually real.
It is real, but it's a joke because when you look at the actual capabilities, there's a lot of things we can get into about what makes that truck inferior to, let's say, F-150. But
sure.
To the guy out there who's like, man, that Cybertruck's a piece of shit.
As he should. As a normal consumer, as he should.
They make up the majority of the market share, though, as far as the people who would be interested.
Put it like this, right? Would you rather spend or invest $60,000 into an EV vehicle knowing that asset is going to depreciate over time, or would you rather throw in $10,000 into Tesla stock? Think about if you threw $10,000 in Tesla today. Ask yourself how much it would be worth 5 years from now. You probably become, probably not a millionaire, but you'd be close to it, right? Just depending on how much Tesla grows over the next 5 years, right? Obviously, we know that they're implementing technology for people to be an interplanetary species, right? They're making plans to send man to Mars. I don't know how reliable that will be.
You think Cybertruck 2 would be the thing that would take Tesla stock to the moon?
No.
Let's say
no.
Well, hold on. Before you say no, think about the fact that the majority of people who would actually go out and buy the truck are average, everyday people who need a truck to service, not just...
Do you want to know why I say no?
Hold on. Okay, so those people take on a Cybertruck and say, yeah, this is going to replace my Silverado, my F-150, my Dodge, whatever truck I have, right? Mm-hmm. So now you have more people willing to go out and buy a Cybertruck. You have more Cybertrucks on the street. That would definitely help stocks.
It would help stocks.
Okay.
So we have
Are we waiting for that, though?
Yes, we are waiting for that. So the masses, right, we're waiting for an affordable EV vehicle that the average Joe can afford, earning a $30,000 salary, that actually is a reliable working vehicle.
Yes.
Now, can we say an EV auto manufacturing company has delivered that product yet? No. And whichever EV company can deliver the affordable EV vehicle for the average Joe will be successful in the EV sector, right? So if you got, and this goes out to Honda, General Motors, Ford, Tesla, if you guys can create a product for us that we can afford, give us our $7,000 tax break, okay? I promise you, those products are going to sell.
There's something wrong, because if you look at like Ford Lightning pickup truck, you would assume that truck would just sell out, but they're just sitting right now. Alongside the Cybertruck, a lot of them are just sitting. The Cybertruck had a low production count, so you can't really count that. Mm-hmm. But these EV trucks aren't taking off.
They're not taking off. They're not affordable.
Do you know why?
I'm guessing it has something to do with the battery recall issue.
You just said affordability.
Affordability, right?
Yeah.
Now, if I can recall, when the Ford Lightnings, when they initially launched, they were selling at about $40,000, right? 37 or 33 with the tax break.
Well, there is a work truck version.
The work truck version, right?
And that one doesn't have a market adjustment cap.
Yeah.
So...
Well, yes, the base entry model, the base model.
Right.
I'm pretty sure you can get the fully loaded model. I think it can
110 or something like that.
110,000, and it also can supply power to your house in case of a blackout.
And it works.
It's very efficient. However, the average person cannot afford that. Let alone, they don't even have the space nor the property to build a battery charging station. You know what I mean?
Affordability is a problem, guys. So that's a perfect opportunity to segue into, maybe current events. And recently we had a debate between Trump and Biden. Hilarious.
To say the least.
And I don't think we really got a lot out of it. Personal opinion aside, we do need to have some kind of change in America, which gives people the ability to afford the things we need. With regard to not just stocks, but just normal household, goods and services that will allow you to kind of, take care of your family.
Right.
So with that being said, do you see any type of change in the Fed in the near future?
Yes, I do, and I'm glad you mentioned that, because this is the main change in the Federal Reserve's that I'm predicting and anticipating before or during the times of election, and that is going to be the first rate cut in the year 2024. Okay, that rate cut can be anywhere from 0.25 to 50 basis points. So if we're currently sitting at a 3.2 inflation rate, they may drop it down to about 3.1 and a half, because think about it, right? What presidential elect wants to enter the election with a piss poor economy? They don't want that to happen. So they're going to, look, guys, anticipate the rate cut. This is why I'm making this broadcast live right now, right here on Refined Wall Streets. Okay? Check me out, all right? You guys need to double down, stay 10 toes down, put your big boy pants on, and double down with these stocks right now, because I'm telling you, when they lower those interest rates, the economy is going to
expand,
flourish with artificial stimulated money in the economy. That is the whole purpose of lowering interest rates. When the Feds lower interest rates, they artificially pump the economy. They stimulate the economy with more money. So that's going to happen. And usually when they lower interest rates, what tends to go up? The stock market.
Yep.
So once again, interest rates are high right now, right? We have to do what the 1%ers are doing. Okay, we need to be working 40, 60, 70 plus hours a week, and we need to really be doubling down on these paper assets, because I'm telling you, in the year 2025, there's going to be a huge wealth transfer. There's going to be a huge wave of new millionaires, and hey, I'm going to be on that rocket. Paul's going to be on that rocket. Jason's going to be on that rocket. You have to ask yourself, are you going to be a part of that wealth transfer movement?
That's awesome stuff, man.
Yeah, that's a great point, man.
Appreciate that.
There's a lot of patience that goes into this game, and you got to literally look at it as a game where you're identifying numbers and reading and react based off what's happening in the market. We understand that life is going to happen.
Right.
We know these businesses are reacting just like we are, but we have to have the discernment. We have to be able to analyze and say, yo, this is what's happening. This is the reaction that people are having, and these are the numbers that's changed day by day. And so, Max said something really important. You talked about being there every day and looking at the stocks, looking at the market at 6 a.m.
Diligence.
And you don't have to even be as honed in as him to be able to have success. You just got to find out your routine. You got to find out your regimen and know that you have to at least at some point be aware of the economics, what's happening.
You got to want to do it.
You have to want to do it. Most
you got to want to do
importantly.
it.
You gotta want to. Nobody's gonna force you and put a gun to your head, because at the end of the day, people are trying to get the advantage. And in life, you should aim for any advantage you have and you can get.